Imagine having the power to become your own banker, free from the constraints of traditional financial institutions. My name is Darius.
And I'm Carmen. By the end of this video, we are going to share whether or not lifestyle banking, or infinite banking like people like to call it, is for you. So make sure you subscribe to our channel and hit the notifications bell so you're notified every time we post new videos.
So what we want to discuss is the realities of becoming your own banker, because there's a lot of, I would say, misconceptions, or people may misunderstand the concept a little bit.
Misinformation, all of that.
Yeah. So just to give you a little history, becoming your own banker or infinite banking was made popular by R. Nelson Nash, who wrote a book called Becoming Your Own Banker on his experience with finances and insurance. Now, the first thing I want to focus in on is the fact that it was based off of his experience, his personal experiences. And I think a lot of times, just even before getting into the four myths that we have, is the fact that people try to make it something different from them. Meaning they want to say, I want to be a real estate investor, when they're not a real estate investor. It doesn't have its foundation in who they are as individuals or their specific financial needs and concerns.
Well, I think you're talking about experience versus sitting on the sideline and wishing that you had the experience, right? So R. Nelson Nash was coming from experience, being a professional in the industry, and then also having this epiphany of like, wait a second, I can use these products a little bit differently or more strategic for my own needs.
Right.
And so I think that's where some of the misconception or misinformation comes from in the industry, is people don't necessarily, one, either have a policy and know how it works, or two, even know how to properly design a policy to do exactly what Mr. Nash was talking about. Right.
Because the interesting thing is people have been using or leveraging cash value before this book was written.
Since forever, yeah.
Since forever. So it's not like it
ain't new.
Yeah, the insurance companies have always allowed people to use their life insurance cash value. It's just that when he had his own specific financial situation, and he had his epiphany, he made the concept of infinite banking or becoming your own banker very popular.
Yeah. And I would say, I mean, there's been many financial books written about cash value life insurance and this and that. But I would say, from my personal opinion, now this is my opinion, is that I feel like this is one of the books that has been written so beautifully for people to really understand how to apply it. And in a way where he's not speaking above people's head. You know, like I feel like he really gets down and dirty with common language to make it relatable and to make it something that people can all aspire to do. So like we said, we have 4 points that we want to talk about as far as infinite banking. We kind of remix the name and call it lifestyle banking, in the sense of like we're always talking about ownership and owning every aspect of our lifestyle. So let's jump into the very first point, which is many people ask, is lifestyle banking only for the wealthy people?
Right. And the answer to that, I mean, we talked about it in kind of the beginning, is not just for wealthy. I think people think that you have to have a lot of money in order to get started. Yeah. When it's a reflection of where you are financially. Is really a reflection of the fact that what are your the financial habits that you have already. To make this work for you, because one thing that doesn't happen is it doesn't work if you don't.
Yeah. And I would say, like, just to debunk everything, you don't have to be wealthy in order to afford a whole life insurance policy. That's exactly what we're talking about, is a whole life insurance policy. Do you have to have hundreds of thousands of dollars in order to afford a life insurance policy? No, we didn't have hundreds of thousands of dollars when we started our first policy. Our first policy was $10,000 a year, and we were saving that much every month. So all we decided, thank you, working on that.
Are you looking for a life insurance policy specifically designed to help you accomplish your financial goals?
And if you have a policy, or if you're looking for more education, would you like to be a part of a community with like-minded individuals who are all using life insurance to accomplish their financial goals? If so, click on the link below. We would love for you to join the Wealth Nation Money School. So what we decided is, if we were going to save that money and put it in a savings account every single month, and that added up to about $10,000 a year, we were like, let's put this money inside a whole life insurance policy. So one, we can have life insurance, and two, we can have access to this cash value. So that isn't, wealthy. And you can even start a policy at different price points depending on your age and depending on your health. This is just our personal experience.
Right. And just like R. Nelson Nash was into forestry, it was a reflection of his experience. Our experience is we had a ton of debt. And instead of paying 25% interest on our debt, we would rather borrow money from our insurance policy and pay 20% back to ourselves so that we can keep the difference of the 4% that was charged to us for our specific situation. And through that experience is how we started to use it, because we made it specific to us.
Yeah. But let me break that down just a little bit in case we lost someone along the way. When Darius was talking about paying off our debt, right? So we have a video where you can reference right here where we talk about how we paid off all of our debt, over $100,000 in credit card debt. Yes, I know. Using an insurance policy. So the idea was, if we knew we were paying 20+% on credit cards, for example, and we knew that if we borrowed from our cash value inside of our whole life insurance policy at 4%, that for us made sense, because we didn't want to continue to paying 20+%. We would rather pay 4%. And granted, we didn't have the whole $100,000 in cash value, right? So we only had about $5,000 to play with. But what we did was we took the $5,000, got a loan from our insurance company, and used that as seed money essentially to start snowballing our debts down. And then when it was all said and done, when Darius was saying paying ourselves back, we say paying ourselves back, but really we're paying the policy back. We say ourselves because we own the policy, so that we take ownership of that. We're paying ourselves back. We're paying the policy back, which is essentially the life insurance company, so that all of that money will go back into the policy instead of it going to the bank. So when we understood this concept, it wasn't about the interest rate that we're paying on our credit cards, or for you, it might be your house, or it might be your car, or any other debt, medical bills, things like that. If it's even debt, right? The idea was we didn't, or R. Nelson Nash talks about, is it's not about the interest rate, it's about the volume of interest. So if we know we were going to be paying 20+% on our credit cards for the next 3 or 4 years, it's that volume, that accumulation of 20% month after month after month, year after year after year, that adds up. And once we understood the math behind that and could do the equation to say, wow, we're going to pay X amount of dollars across, 5-6 credit cards, like that's a big deal. And how can we redirect those funds to be more strategic and keep that money, as opposed to it continuing to be paid to the bank and we never see that money again?
Right. So we weren't wealthy. We were just disciplined and persistent.
And I would say, back against the wall, had to figure out a solution like that. You know what I'm saying? Like, if we're being honest with this situation, like we continue to say we're always going to be transparent. Like, we were at a point where we didn't have any more income. We had to figure out a way to pay off our debt. And when this concept was introduced to us, we looked at each other and we're like, are we going to do this? All right. How is this going to work? We got to make it work, because something's got to give. And it wasn't until we really started adopting this principle in our lives where we could really see things change. So we didn't have to be wealthy to do this. We have hundreds of clients who, make, let's call it $60,000, $70,000 a year. Is that wealthy to you? That's wealthy to them, whatever the case may be. But again, you have to think about this in what makes sense for you. And we always call it your personal economy. So your household income is your personal economy, and it's your responsibility to protect as much as you can and be aware to how much money is leaving your household every single month.
Right. So our clients are disciplined and persistent. The second myth is lifestyle banking requires extensive financial knowledge. And we talked a little bit about that on the tail end of the previous concept. Is the more simple you make it, the better it is for you, the better it is to implement, and the better it is for you to understand. Simplicity is key. And I think because people assume that you need to be using it to have these complex strategies, or using it to create these complex strategies of investing in real estate, or investing in the stock market, or buying cars. Like, you don't necessarily need that. That's only a reflection of where you are or trying to accomplish personally. What are you trying to accomplish personally? And you need to have a really good understanding of that, because at the foundation of this concept is good savings habits and discipline. Good savings habits and discipline. Because in order for you to do anything, you have to have money in the first place. And you can't have money if you don't have any savings.
Yeah.
Right?
Yeah. And I think I laugh because we have you and I have two completely different approaches when it comes to our finances. Like Darius obsesses over it, constantly. He's always checking the accounts. It doesn't matter if it's 3 a.m, 6 a.m, 11 a.m, whatever it is, it's like all day long. And for him, it makes sense because that's how he works things. And Darius is very much a mathematician, so he's always tinkering on equations. He speaks in equations. And so for me, I'm just like, does it make sense? Whatever, kind of just high level. So again, it's a reflection of where you are financially, and you don't have to be the master investor in order to make this happen. You just have to have knowledge of what's happening within your own bills. You know what I'm saying? Like, let's bring it down to a different level. You don't have to be up here, and don't let anyone make you feel like you have to be up here as far as understanding investments and moving money and creative financing. You just really have to be in touch with your day-to-day spending, I would say, because if you're going to use this to pay off debt, if you're going to use this to maybe invest, maybe have cash flow and not know what to do with your cash flow, the idea would then be, what vehicles do I need to start researching so I can place my money effectively? So again, it's not about being Warren Buffett. It's just about wanting to be Warren Buffett.
And it's interesting you say Warren Buffett, because even at its foundation, the way Warren Buffett investors is very simple.
Yeah, it doesn't have to be complicated. Yeah, I find that the best opportunities we've had when it comes to investing have been simple. Like the things that have been overcomplicated and very stressful. The result, what was that?
Right. And it's like that because we don't understand it. Exactly. If it's not simple, then you don't you don't understand it. And in order to start doing this concept of lifestyle banking, it's simple at its foundation. It's us individuals who make it more complicated.
Yeah.
So it doesn't require extensive financial knowledge. It actually at its foundation requires a very simplistic understanding of finances, meaning you need to save your money in order to purchase the things that you need in your life. And you need to pay yourself more in interest than what it costs you in order to have money.
Agreed. And going back to your opening statement, you were talking about like imagine if you could be your own banker. And I think a lot of times people kind of confuse this concept with, wait, do I have to go out and like buy a bank? But the idea is no, with everything that we're talking about, do you have to be wealthy and do you have to have extensive financial knowledge? No, you don't. But you have to have sound financial habits, thank you, in place in order for this to happen, because we're not trying to own a bank necessarily. We're just trying to adopt the banking principles. So for example, when you go to the bank and you have the conversation with the teller, what's happening, right? When you sit down and you talk to your personal banker, what's happening? What are their processes? What are the contracts that they're giving you? It's sitting down and thinking about it from a higher level as opposed to owning the brick and mortar, but just like, hey, if they're going to charge me this much, how much should I charge myself? Why am I even getting money in the first place? Because maybe I don't have it. It's thinking about money differently. That's all it is.
Right. Now, the next myth is lifestyle banking provides instant wealth accumulation. It's not a get rich quick thing that happens overnight. It actually takes years in order for your system to develop the way that a lot of people talk about. In order for us to pay off our debt, it took us about 4 years to pay off our debt. But in that experience, what we started to do is accumulate money over time that allowed us to start investing in or making investments, period. And what you have to think, you have to actually give it time.
Yeah.
It does not happen overnight. If you think it's going to happen overnight, then you're setting yourself up for failure.
You'll be very disappointed.
Right.
Yeah. With this topic that we're thinking about, I kind of go back to why, as a society, do we always assume that there's an option for get rich quick?
It's because what we see, we want what we see to happen to us immediately, and what we don't see is that it took 10 years to be an overnight success for some people. It took them years of failure in order for them to get to the point to where they can tell you about their experience of being a multimillionaire or a billionaire. We see it and we want that immediate gratification because that's what we see. But we can't believe everything that we see.
Yeah, that's a good point. Yeah, and also too, like if you think something is going to get you rich quickly, then you should probably think twice about it. Because when you are building true wealth, it's going to take time. True wealth is something that you put on, if you're roasting something, you put on 175 and you let it roast for however long it takes. Like that, we have to think about wealth, and that's really the only option that it's going to take. And again, going back to that discipline, like knowing if I get paid, X amount has to go to savings every single month without question.
Yeah, even if you have debt, you have to think about how long it took you to get in that specific debt. That's how long it's going to take you to get out of. And in order, same thing with this concept, it's going to take you years to get to the point to where you basically own everything in your life, in your lifestyle.
Totally.
Because of how we spend money in the first place. We have to look at how we spend money, our habits, and we have to put ourselves in a position to not only make it simple, we have to also understand that it takes time.
Yeah. That's just what it is. And there's nothing else to add to that. It's going to take time. So number 4, the fourth point that we want to talk about is lifestyle banking a one-size-fits-all solution? And the answer to that is absolutely not. No. Nothing is ever a one-size-fits-all solution. The idea behind this is, again, going back to, we keep harping on you need to understand your goals. And the reason being is because if we design your policy for you, if any member of the Wealth Nation team designs your policy for you, we need to understand your financial goals so that we can make sure we create a policy around that's going to lead you in that direction. And that's really something that is important to us, because it doesn't make sense to create a policy that isn't going to fit inside what it is that you're trying to do.
Right.
So that's why for us, it's like, okay, what are you trying to do? Are we paying for Jimmy's college? Are we going on vacations? Are we paying off debt? What is this policy going to be used for? And we're going to create a policy around that. And the idea is, again, we're creating a policy for today, right? Not for tomorrow. So how is your what do your financials look like today? And then in the future, if they change, then maybe we get a different policy with different goals and aspirations, because at the end of the day, they all wrap into together and you can use them in multifaceted.
Right. And that's speaking to somebody that's in their 60s ready to retire in tomorrow. And if you're 20 years old, you want a policy, you may have a policy that's designed a little different than somebody that's 60 years old, because you have, not only is your policy size different, but your wealth accumulation time frame is different. You can get a smaller policy and do more with it because you have more time. You have less health issues at a younger age. When you get older, you may have more income.
Yeah.
Than someone that is in their 20s. So there's a lot of different variations and levers and stuff that you have to take into consideration in order to make sure you have the best solution for yourself. You may be a business owner. You may have multiple businesses. You may be a multimillionaire in your 40s. All these things give you a different design for your banking system that you create.
Absolutely. And it's really amazing that this isn't a one-size-fits-all solution, because you're able to solve your specific goals with a simple design.
Right. And that goes back to how Becoming Your Own Banker book was written. It was written based on a specific experience that Nelson Nash had.
Yeah.
Our success in our system is based on a specific experience that we had with our credit card, that because we were able to implement this system years ago, we were able to benefit from it, not just in debt, but also investments moving forward.
Yeah.
And you have to give yourself time to accumulate wealth. You have to give yourself time to understand how you want to implement the strategy or specific strategy for yourself, and you have to be persistent in discipline.
Yeah. And going back to Nelson Nash's book, he specifically talks about, like you were saying, he was in forestry and the need for having multiple vehicles. And he was going to the bank and financing his vehicles at the bank, as we traditionally do. And it wasn't until he was thinking about his policy, he's like, wait, I have the same amount of money in my policy. Why don't I just borrow from my policy, and instead of paying the bank the principal and interest, I'd take that same income that I would have been paying to the bank and I put it back in my policy. And now that money stays with you. And so we looked at that high level concept and we said, well, if he's doing it with cars, we can do it with our debt. It's just about looking at the numbers differently and making it make sense for whatever it is that you're trying to do.
Yeah.
And the same thing for investments, whatever it is.
Yeah. It gives you the ability to take on a traditional banking systems of varying interest rates, and at the same time allows you to accumulate money for your safety. So it's very important for you to not only understand these myths that all of them aren't true, but it's also important for you to understand what you're trying to build and why you're trying to build it.
Yeah, and additionally, I would say I'm adding in a bonus point, number 5, is that lifestyle banking is only for young people. That is absolutely not the case, because we get people every single day that say, hey, I'm 50, I'm 60, I'm 70. Does this make sense for me? And our answer is always, do you have money in the bank? It doesn't matter how old you are. If you have money in the bank and you still have aspirations and desires to move money and make more money, then it makes sense for anybody at any age. Now go ahead and do yourself a favor and check out our next video so you can start learning all of the details and processes so you can start owning your own lifestyle.
Or someone else will.